Let me bring on board Mr. Subramaniam, the CFO at Titan, on the demand trends that they witnessed this festive season. Mr. Subramaniam, so tell us, how was this Diwali vis-a-vis last Diwali? What were the trends like this time around?
Yes, I think it's been a good season, good festive season. We've seen demand come back quite strongly from what we experienced in the first two quarters. And after a long time, we've actually started seeing growth. And that's the best news here, which is that during the festive season, and here when we say festive season, it's the 30 days from Dasara to Diwali. And it has the Dasara festival entirely, and of course the Dhanteras before Diwali, and of course it ends with Diwali and Bhai Dooj. So this 30-day period is typically when you look at as a festive period. And if I were to look at what we've done in this period, at least I'm talking of jewelry to start with now. Jewelry has actually grown at double digit now, mid-teens possibly, and that ballpark is where we are today. So the good news, therefore, is as far as jewelry is concerned, we are hoping that finally we are out of the recovery stage to a growth stage. At least that's how we are seeing it at this point in time. The demand has been strong across the board. And the good news is that the studded share has started going up, which means that people are coming back and are spending money on discretionary items as well. So that's generally, and if you look at what's happened across the board, you're getting the same news across all consumer discretionary items. Our own watches business, if I were to take watches as very clearly a discretionary item, we are seeing a recovery which is very, very, very strong. So it's come back to almost 90% plus levels there in the season, which is a good news. And eyewear is fine, because eyewear this is not a very big season for eyewear, but it's still caught up quite decently during this period. So I think the good news, therefore, is that we are seeing recovery across the board. Jewelry is growing, and within jewelry itself, we are starting to see studded share getting better, which is a very good sign that consumption possibly is back.
Okay. What about footfalls, actual physical stores and the kind of traction you witnessed there? What's been the latest development on that front?
Absolutely. I think footfalls are back. That's the best part. We are almost close to last year's levels as far as footfalls are concerned. Of course, this year, because of the gold price increase compared to a year before, the ticket sizes are much higher than last year. So to that extent, that itself is giving you a certain growth this year. But the important part is, are footfalls coming back to normalcy? Yes, they are almost there. We are below last year's levels at this point in time, but that's not bad, because considering the season and the various social distancing norms that we have incorporated in our stores, the limitations on number of people who can come, etc., I think it's not bad. It's coming back strongly. Therefore, I think the as we call it phygital, right, which is the physical and the digital convergence has worked very well, and so a lot of customers continue to explore the products more at the back end, at the digital end, and then come over to the stores when they actually want to buy it. And even during this entire festive season, I think we could manage the crowds very, very well, including Dhanteras. And fortunately, this time Dhanteras was spread over 2 days, 12th and 13th. And therefore, the crowds were very well managed. But the good news was, yes, people were coming in. Walk-ins were really much better than what we've seen earlier.
Right. Mr. Subramaniam, with people spending less on wedding jewelry, wanted to understand what's really happening to the segment A, and what is the expectation when it comes to the jewelry segment, in particular in the third quarter?
I don't know. Anecdotally, maybe the answer is yes, and logically also the answer may be yes, we don't know. But the overall ticket size, as I was telling you earlier, has gone up. It's gone over 100,000 rupees, so a lakh today, which used to be in the ballpark of 85,000 last year. So it's clearly over a lakh now. So to some extent, it's to do with the gold rate, which has gone up. But to some extent, possibly what you're saying, which is that people are not having other avenues to spend. The spend on the wedding itself is much lower. It could be a contributor. But at this point, it's very difficult to actually pinpoint and say that this is the reason.
Right. Okay. The advanced mix in jewellery because of lower started shares impacted the operational performance in the second quarter as understood it. You mentioned about the recovery as well, which is kicking in the
Right. Let's get a move on then, and also wanted to get in your perspective on the adverse mix in jewelry. That's largely due to the studded shares, and that's impacted the operational performance in the second quarter. You spoke about the recovery in the studded jewelry segment. Can we expect the operational performance as well return to normalcy soon?
Yeah, studded jewelry, yes, with the recovery of studded jewelry, you should start seeing our gross margins improving to an extent, yes. But normally studded jewelry is not associated, at least we do not consider it as part of wedding jewelry. Wedding jewelry for us, as defined by us, is largely plain gold jewelry only. So studded jewelry may be used for weddings, but we don't classify it as that. We have this as a separate segment by itself. So I don't know how much of that is actually being used. But if you were to look at wedding jewelry as a segment, which is in our case, anything over 50 to 75 grams of jewelry, then that is growing. And that's growing because the wedding season is a strong season till about mid-December. So one is hoping that the season does continue to remain strong.
And as we are seeing quite a few positive starts coming in with on the vaccine front, we've seen gold prices as well tapering off a bit. How do you see all of this impacting your business?
I don't think it has actually impacted us in either way. And if anything, it may be slightly positive from a different perspective. That is, one is that if when gold rates go down, it's more convenient for people who are buying for wedding and for festive seasons to buy more jewelry, more grammage. So that's one aspect. Second aspect is that as if gold were not seen to be a major asset class at this point in time, not as attractive as it was, say, maybe 3-6 months back, then the coin sale itself will also fall, which means that the margin erosion that is there, because coins have very low margins, that also may dip a little. So it's not bad at all. The situation that we are in now is rather convenient. It's good. We are seeing people coming and buying a little more grams possibly because the gold prices have stabilized, and we are not seeing very high coin sales. It's been, obviously, this quarter coin sales will be high because of Dhanteras and Diwali, but it's not been unusual.
And after having seen quite a good run in and growth in your watches segment, that seems to have now slowed down. So what kind of growth can we see from the watches segment, given the kind of challenges that you're presented with, the fact that we've already seen a slowdown? Will it be more prolonged?
I think as far as watches is concerned, it's extremely discretionary because it's not coming under the asset class like the gold jewelry is coming in, and therefore watches is to do with consumer sentiment and desire to buy things off the shelf. And obviously, because of the pandemic and the fact that most people are sitting out of home, you are not going to be buying discretionary products which would otherwise be bought if you are going out. So you have to accept the fact that the watches will get impacted, which is what happened in the first 2 quarters. The good news is, as I said, that this Diwali season, we have seen a very strong recovery in watches, and it's been strong across every channel. Our own World of Titan stores have started doing very well. Helios is doing well. And if I were to consider the online channel, I think they're done very well in the online channel. Our growth there has been very, very good. So, see, all the channels, therefore, are kicking off quite well. And therefore, we are starting to see recovery very strongly in watches as well. And as expected, I think in the last quarter, for sure, we should be reaching the normalcy as far as top line is concerned, which is a very good sign because that category is like that.
Sure. Mr. Subramaniam, unorganized local jewelers have been under pressure because of COVID. What is the market share gain that you've seen during this period?
I would think we are gaining share. It's obviously very difficult to get information on this because of the industry not having publishing numbers, etc. But on the ground, as we were to look at each of our competitors, it looks like we are definitely gaining share. Yes, there are a lot of jewelers are under financial stress because of COVID. And that continues to be there, and it's going to be there for some time. But I also understand that this Diwali season, most of them are recovering quite well, which is good anyway, because it's good that the industry itself grows. Then our growth can be even better. I would think that what we saw in the last two quarters is possibly starting to reverse. The jewelry industry may start growing now, and hopefully things should start getting better.
All right, we'll let you go on that note. Thank you so much, Mr. Subramaniam, for giving us a sense as to how business is shaping up, which segments have been doing well, and the impact of the lockdown on your operations.